All right. It's Jared here from Crypto Plan. How's everyone going? I hope you're well. Got another lesson today. Going to try and learn some things together. Learn from my mistakes. Alrighty, let's get down to business. Yeah, like I say, I'm all about learning, and unfortunately, you have to learn by mistakes. And luckily for me, and hopefully for you, there are only small mistakes. And so I'm going to run through what that is and how to benefit from that in the future. And kind of just develop that trading plan once again, and make sure that you're always having your money working for you, whether the thing is extending and going bullish or it's crashing or correcting, right? So I'm going to have a look at that, and I'm just going to draw you back to here. So using the one on about a month ago, using the one harmony chart to predict the Bitcoin crash. So in this video, I basically kind of saw a structure in Bitcoin versus Harmony there, where Harmony had kind of done this tap weakness and then was correcting, and Bitcoin was beginning that right. Now, at that time, I knew that there was going to be a Bitcoin correction. I didn't know how long it was going to take, and I really didn't know what to do with that information, because I'm new enough and I'm learning, and I'm generally a long trader. So I wasn't really sure of a strategy of how I should play that on the downside. Now, I did kind of play it, for fun by buying some -3 leverage Bitcoin tokens and made a couple of bucks on that. But in hindsight, I probably would have put a bit more effort into playing that particular play and playing the downside of Bitcoin, and maybe other minus leverage tokens as well. The same way you would short a stock just without shorting it, So just going to have a look into that. And just to be clear, that on the 19th of April, that's when I kind of knew there was going to be correction. I called it around 37. It definitely dipped lower, and we all know that. So I thought it was going to hold there. But I guess, that whole triggering of automated sells and that sort of thing, and the weaker hands back in this level just really extended that flowing selling pressure flow. So yeah, that's that. So anyway, we're going to get into the charts and just have a look at a few new things I've learned. So like I say, I'm learning Stan Weinstein's trading techniques. So on the long side, hello everyone, just going to break in here briefly and just let you know that whenever I say 30-day moving average, I actually mean 30-week moving average according to the strategies I'm discussing. Back to the video. If we go back, if we're talking about Bitcoin, breaks above the 30-day moving average, retests, hovers along there, then, your long trade was all the way up there, right? So all the way to the 30, while you're above the 30-day moving average, and if you were taking profits, you'd be taking it up here, and then you'd definitely scale out everything once it crossed below the 30-day moving average. Now, that's all good and well, and that's the indicator we're going to be using for a confirmed bear market move. And now, if Bitcoin doesn't come above this 30-day moving average, if it can't break above it and use it as support again, that is scary. So we've just got to keep an eye on that. But we're just more looking for in April there. So where were we in April? So in this move here, we had enough data to predict that there was going to be a Bitcoin crash, because we had this kind of weakening attempts at making higher highs whilst volume was dropping, and whilst we just felt that it should have been correcting at the time, but the price action was going up. So it was a little bit too bullish, so we felt like it was going down. That happened. We can see it dropped all the way down there, but just want to look at kind of another indicator that really would have told the story. And now this one's down here, this momentum indicator on TradingView. It's similar to the RSI, but without the kind of range thing. So it's just a clear indicator once again that, see from the 15th of Feb when we made that all-time high and then we made weaker highs, it was kind of an uptrend, but there was a bearish divergence there, as in the momentum, the energy that was behind that increasing price action was quite weak. And then you can see it just fell off a cliff, the same with price action. So that bearish divergence there would have said that on this date, the 5th of April, maybe the 12th of April, maybe on that last peak would have been the perfect time to sell. If if you had the stomach to do that and you were like, definitely this thing's going lower, perfect time to sell now. If not, if you decided to short it a little bit lower, say on this dip, or something like that, then you might go, well, here's my stop loss. My stop loss is at the 65. So if it goes higher than that, I've got to buy back in. But essentially, it never went higher and it fell down there. So anywhere around here, if you were attempting to short the market, whether it be through leveraged tokens like -3 Bitcoin tokens, or minus the market tokens, or whether you're actually playing the short game, it would have been a great opportunity to make some money, to accumulate, to buy the bottom of these dips, right? Or, even to get back in when the market goes bullish again. So that's the idea there, that rather than what I guess I was doing, and the mistake I did make was seeing these dips and going, oh, well, I'll buy a little bit and I'll buy a little bit, like accumulating the dips, which is fine in a long-term, long strategy. But, now that money's sitting there and it's kind of dollar cost averaging down, as opposed to saying, well, I'll put everything into a short trade, and then take the entire profit out of that short trade somewhere down here, sit on the sidelines, and then when things break above, bullish, the bullish side of the indicator, then I'll go long again, So it's you're not playing this guessing game, if you like. I'm just going to look at the crypto market cap in total and see that the bearish divergence was there once again. It wasn't as drastic, but you can see that's mainly made out of Bitcoin. It was going up on the price action, but it was going down on the momentum indicator, right? The one that we couldn't have figured this crash out, and I guess there's a reason for this, is that, Ethereum was still going strong all the way up till May here. Is that there was no bearish divergence on the total too. So the market cap of cryptocurrencies minus Bitcoin. Now, having had this one and this one being bearish, at that point, you could probably short the entire market, knowing only that Bitcoin generally drags the entire altcoin market down with it. But, we were all sitting there on the sidelines going, is that drag down going to, pull this alt season to kick off? You never know. And I guess, it's all hindsight behavior, but definitely, from a safe trading perspective, even if the altcoins didn't dip, I'm thinking that, something that I'll learn in the next bull run or in the next market cycle, whether it be Bitcoin or, stocks or assets, is that when you see these kind of divergences, it's time to go short temporarily, to hedge your long positions, so that you're making a bit of money in the meantime while these corrections play out. So, in this case, let's say you went, your -3 leverage token, or you went short on Bitcoin, dipped all the way down to 30. You're making, double your money, triple your money, quadruple your money, depending on how much leverage you're playing, right? So a perfect time to, just keep building the cash coffers, while the dip in the market happens, for the bull run to resume, right? So that's these are the little things I'm picking up along the way. Now, as far as the long side of crypto, and still being quite cautious, and to be honest, like, fear is a huge thing at the moment, and I know that, like, I'm not fearful as in at any time I'm going to sell everything and, cut my losses kind of thing, because I was always in this market for all or nothing. So I definitely am willing to have made the mistakes I've made, knowing I could have made more or could have been safer or less kind of fearful along the way. But I don't see that there is any key reason to be fearful in general on the long side of the market, only because, once again, looking at our 30-week moving average, when the total market broke out, it hasn't touched that 30-week moving average until now. So all it's doing is spending a bit of time hovering along that 30-week moving average, building up a bit of steam, building up a bit of momentum, ready to launch again. And you can see, that in the price action, that there's a range here. that's looking to kind of, accumulate and start a stage one accumulation, like between a range, and then it'll break out again. And same down here on this momentum indicator, we're seeing that, a little bit of a range is falling in momentum. So that's kind of probably going to skip along for a little while now. Timing is something that I'm trying to do less and less. I know that, in general, we can say kind of 2-week dip, bit of a range, and then hopefully 2-week pump on out of there, if we want to be fairly symmetrical. But, that's just based on purely speculation that whatever happened on the way in will happen fairly symmetrically on the way out. But either way, just wanted to share, something new with you while this correction's happening. I'm still holding, I'm still long. I'm definitely not regretting the mistakes I made, but just realizing that potentially trying to catch that falling knife and going, oh, it's a dip today and I've bought a little bit more and I've added a little bit more, even though in the long term, I'm confident that all of those little extra bits I've added will be much higher at the end of the bull run than they are today. What I'm learning is it's better to probably at this game, if you're long only, is just to accumulate cash and wait for the signal that things are definitely on the way out and they're moving up strongly, or to play the short side, possibly, knowing that, on Pancake Swap there, or, on the Trust Wallet or wherever you're trading, there is some negative leverage tokens that you could just go, do you know what? I'm going to take some profits at the top. I'm going to buy these kind of negative leverage tokens. That's going to be my play during this correction. I'm going to, set some targets where I'll, cash out of those negative leverage tokens, sit on that cash for a little bit until the things start moving again to the upside, and just call that your kind of trading position whilst holding mainly your long position, knowing that this is just a correction, a dip in the market, half time, crypto half time, whatever. So that's where I'm at. Just kind of, just learning and understanding what has gone on, and not one thing, like I say, to predict the crash was one thing, but it was like, what am I going to do? What am I really doing? And before the crash, I was like, I'll buy the dip. I'll add to these long positions. But probably a better play to just stand on the sidelines. Potentially like completely get out of your long positions at that very top, sell everything, and then buy back in really cheap, and then ride it all the way out, or like I say, kind of have a bit of a play on the short side. All right, I've been Jared. This has been Crypto Plan. I hope you like these kind of semi-educational, semi-kind of motivational updates on the market, learning from our mistakes kind of videos. I know that I would personally, if I was just a watcher of this sort of stuff. But please like it if you do, and all the other stuff about subscribing and notifications if you're new around here. So let's catch you on the next one, and hopefully we see some more upside action in the crypto market next week. Bye now.